Have you heard people speaking about probability this and probability that when it comes to trading? Now, today's video is going to speak about having a probability-based mindset. Now, as the title suggests, guys, we're going to go into probability-based mindsets. Now, what are probabilities to begin with? Probabilities are just the likelihood of something happening. Simple as that, straightforward, guys. Now, how we incorporate probability-based mindsets within trading is that, guys, we need to be thinking about things in terms of probabilities. Now, there are two main types of probabilities here that I wanted to break down for you guys. Now, the first type of probabilities are theoretical probabilities. Now, what that means for us as traders is that every setup that we're taking has a theoretical probability. Like, for example, if we're traders trading reversal structures and we're looking for those double tops on structures, those double tops, guys, have theoretical probabilities that they function X amount of times out of maybe 10, or they work maybe 8 times out of 10. That is our theoretical probabilities. So we need to understand what our theoretical probabilities are when we are trading the specific things that we are trading. For example, we need to know what's the theoretical probabilities involved with us using market structure for our analysis, so to find a directional bias. How often does market structure actually give us the right direction or allow us to be in on the right direction? Second type of probabilities, guys, is experiential probabilities. Now, this is the most important thing for us as traders. Experiential probabilities are the probabilities that arise, or the probabilities that we conclude through experience. So through actually doing things in the market, through actually trading those double top structures as our example, we then get to see what the probabilities are of us trading this particular way, or this particular asset, or this particular style, or this concept, or this structure, or whatever it is. We then begin to understand trading that particular way. What probabilities does that give us within our experience? Now, what this means for us as traders is that there are two types of probabilities. We have theoretical probabilities, and then we have experiential probabilities. Now, how we actually refine what we're doing with our experiential probabilities, because that's what's the most important thing as a trader. The probabilities that you experience, the probabilities that you essentially, I guess, conclude at based off what you're trading. How we actually find those is through backtesting, guys. Backtesting gives us what our experiential probabilities of trading a specific method would be. So, for example, maybe trading double tops says that the theoretical probabilities of trading a double top is that double tops will maybe work 80% out of every 100%, or work 8 times out of every 10 times. Now, what our experiential probabilities will then tell us is that when we are trading, for example, AUD/JPY, that on AUD/JPY, double tops only work 50% of the time, or 5 out of every 10 times. And for example, maybe on AUD/USD, which is also a correlated pair to AUD/JPY, we'll find out that double tops maybe work an average of 80%. So through experiential knowledge, guys, through looking at these experiential probabilities, that's how we kind of, or rather through our backtesting, that's how we kind of narrow down our actual trading, our experiential probabilities. Now we've backtested, now we know that our double tops function this much percentage on this pair, and so that's how we kind of refine things based off probabilities. Now, we also know that our concepts that we're trading, like support and resistance, like all of these things, all have probabilities, or all function on a system of probabilities. Now, that's just simply how likely something is to happen. Now, how we involve our probability-based mindset when it comes to the setups that we're looking at is that we pay attention to what are the current probabilities that the market has for us if we trade in a specific direction. For example, if we're looking to buy, or let's just say if we're looking to sell that double top on AUD/JPY, what are our probabilities of taking this position? Now, our probabilities change according to where within the market we are taking this position. And having a probability based mindset, we will then approach the market differently. We will then say that when the market is in this particular area or at this resistance or showing us this double top, that increases our probabilities of being right in this pair or on this pair or in this market, on this financial asset. That's what probability based mindset is, or probability based thinking. It's just you approaching the market in terms of probabilities. Where is the most likely area for you to stack the probabilities on your side? What are the confluence factors that you need on your pair to basically stack the probabilities on your side? Even if you're tipping those probabilities, for example, 51-49, as long as the probabilities are tipped in your favor, we have a greater chance of actually winning this position. Now, I'm going to give you guys an example of how our theoretical probabilities will change when we actually do our backtesting. Now, I'm going to give you an example of a coin toss. Now, a coin toss, we know that only has two sides, heads and tails, and obviously we expect a 50-50. So the theoretical probabilities of flipping a coin would be 50-50. So out of every 10 trades, or out of every 10 coin flips, we expect 5 to be heads and 5 to be tails. Now, how our experiential probabilities will change is that we now actually start to flip the coin 10 times. And for example, if the coin lands on heads 6 times out of 10, now we know that our theoretical, or not even our theoretical, my apologies, now we know that our experiential probabilities are actually 60%. So we know that through our actual experiential probabilities and testing, we expect to land on heads 6 times out of 10. So that's how our theoretical probabilities differs from our actual experiential probabilities. We know that theoretically things are this way, but with the market, guys, the market is so subjective that you have to actually test these things and come out with your experiential probabilities. That's what traders need to work off. We can't just base our decision making on theoretical probabilities. We need to refine what we're doing. We need to understand the actual experiential probabilities. We need to know that when we're trading double tops on AUD JPY, we're going to have a lesser probability, or we're going to lose more trades than we're going to win trading those double tops on AUD JPY. And when we move to AUD USD, trading the exact same structures, just because of the individual movement of that particular market, we expect our experiential probabilities to be different. Maybe trading double tops on AUD USD gives you a higher win rate. Now, that's the kind of way that I like to actually approach my markets. I always think of things in terms of probabilities. I never ever marry my setups. I never ever convince myself so hard to the point that I can't go against my own analysis. I always keep things very open-minded. I look at my support and resistance and understand that when prices get to a specific support or a specific resistance, that's where my probabilities will increase, just based off adding those confluence factors. If I see a descending structure coming to support and then a double bottom structure, I know that with all of those confluence factors, my probabilities are increased. So I guess I just threw in some waiting for confluences there, and just kind of showing you guys how we can add our confluences, and by adding these confluences we are actually changing the probabilities that are on our side, because we're approaching the market from a probabilistic standpoint. So we should be looking at everything in terms of probabilities. How likely is this to happen? How likely anything is to happen, we can derive or conclude based off the confluence factors, based off the objective things that we see on our chart. That's why I absolutely love technical analysis. Technical analysis kind of allows us to trade based off the logic, to look at what we see objectively, and also to allow these confluences to stack up. If you're trading based off fundamental analysis, you have a limited amount of confluences that you can basically stack up to increase your probabilities. Because trading off one piece of information, whether news is positive or negative, if you guys think that's enough confirmation, then definitely go ahead and trade those fundamentals, guys. Everything is subjective. If you're making money from a particular way of approaching the markets, then it should work for you. but we're talking specifically regarding technical analysis. We're looking at how we can develop an edge using our technical analysis and obviously approaching the market from a probabilistic standpoint. And that's obviously waiting for our confluences. Confluences equal an increase in probabilities. Now guys, we're at the end of this video. Hope you guys enjoyed it. Hope I shed some light on something that you guys were actually thinking about and trying to refine in terms of your own personal trading and in terms of your own objectives, your trading objectives. Otherwise guys, this is T.Mayne, your FX Chasers mentor. If you haven't subscribed to the channel, definitely do subscribe. I would appreciate it. Trying to get to 1K subscribers just so that YouTube can allow us the opportunity to start going live from the YouTube platform. I know you guys will receive a ton of value from that, and I know other people will enjoy that too. So definitely do subscribe if you haven't subscribed. Let's get to 1K subscribers. Let's go live on YouTube. It's gonna be amazing. We're gonna share a lot of value. But otherwise guys, if you haven't subscribed, do subscribe. Otherwise, drop this video a like if you've received some value. This is T.Mayne. I'm out. I'll see you guys in the future videos. Cheers.